Thank you for joining me on this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you minimize your losses and keep more of your profits through our proprietary market signals that are emailed to you every weekend for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Wednesday, March 18th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. We're going to start off with a 1 month, 1 day chart. So each candlestick represents 1 day of trading in the S&P 500. And as we can see for the last month, we have been going steadily down and to the right. Very bearish chart there. And we can see here for the day, we finished down 5.18% on the S&P 500. And we closed at 2,398.10, barely closing above that 2350 level, which is this blue line here. But we can see for part of the afternoon, where you can see the tail on this candle, we definitely spent some time below that 2350 level. But the good news is we at least closed above 2350 and just below 2400 on the S&P 500. So for at least for now, the 2350 level is holding up. What we're looking at here is a 7-year chart where each candlestick represents 1 week of trading on the S&P 500. And as you guys know, I've been talking about this 2350 level, which is, of course, where we started this last leg of the bull market before going into a bear. And so this 2350 level does have significance because it's where we bottomed at the end of 2018. And, of course, we had some trading in this area for about February, March, and April timeframe back in 2017. And, of course, we tested the 2350 level today and closed above it. But it's just a matter of time, guys, before that 2350 level gives way and we find ourselves down here in this area, which is going to be somewhere around 2,000 plus or minus about 100 to 125 points on the S&P 500. So it's just a matter of time, guys. These are very, very dangerous markets, and we just need to prepare ourselves because I see no way around it. We're going to get down into this 2,000 level, plus or minus 100, 125 points. There was about 2 years of trading between 1,900 and 2,100 on the S&P 500. So a lot of technical support in this area, and let's hope that holds. And then we need to prepare ourselves for the possibility of it getting worse than that. Again, that 2,000 level is here, and now, of course, we're looking at a monthly chart going clear back to 1990. And if this 2,000 level, plus or minus about 100 points, 125 points, doesn't hold, then we need to prepare ourselves to get down to this 1,550 level on the S&P 500. So somewhere between 1,500 and 1,550, there will be a tremendous amount of support. And mathematically, guys, all it would take on the S&P 500 is for the aggregate earnings for the S&P 500 companies to come in 33% below what we saw in 2019, and then you put a 14 multiple on that, and you come in somewhere around 1522 on the S&P 500. So both technically as well as fundamentally, it is completely within the realm of possibilities that we will find ourselves once again down at this 1,500 to 1,550 level on the S&P 500. Now, as I have been talking, the problems are not just about the stock market. They're not just about the coronavirus. We have problems in the oil markets. And this is a chart of the WTI Crude, so the West Texas Intermediate crude pricing going clear back to 1990. And over here to the right, you can see that we're below $30 a barrel, about $27 a barrel on the West Texas Intermediate crude. And if you go out and look up the production costs for most countries around the world, you're going to find that their break even is at least $50 per barrel. There's very few countries in the world that can produce oil for less than $50 per barrel. So this is a real problem, guys. And you can see that at under $30 per barrel on WTIC, we haven't seen this level since 2016 into 2015, and we visited that for a short period of time. Again, each one of these candles is a month. And then to go even further back, you have to go clear back to 2003 to see this low of an oil price. So this is causing stress in the oil markets, the debt of these oil producers, whether it's domestic or foreign. And there's a lot of countries that a large percentage of their revenues are driven by oil revenues, and so that's going to put stress on their debt and their currencies. So again, this is another one of the things that is adding to the problems in the global market. And then just so you understand that the problems continue, let me just refresh the screen to make sure we have the most relevant data here, most current data. So now what we're looking at here, of course, is the S&P 500, and this is just for today. Again, we were down 5.18%, but now we're going to look at gold and gold miners and also the treasuries, because again, we've got problems in the bond markets, but I also want you to understand that gold isn't helping you here either, okay? So just today, the GLD, the ETF that tracks gold, was down almost 2%. We had the 7 to 10 year Treasury bond ETF down 1.39%. This is just today. And the 20-year Treasury bond ETF was down 5.64%. So again, guys, this is real, okay? And we really need to get our head wrapped around this, that there's problems in the oil markets, there's problems in the bond markets, and, you know, gold isn't helping you, gold producers. Look, this is just today, okay? The large cap GDX, that's the large cap producers, down 22.82% today. The small cap GDXJ ETF in the gold space down 24.67%. These are the miners, okay? And then let's go over to a 1 week chart. And what we can see here is the S&P is down, S&P 500 is down 12.52% today. The large cap gold miners down 21.82. The small caps 25.73 to the negative. Gold itself, driven by the GLD or tracked by the GLD, down 8.59%. The 7 to 10 year Treasury bond is down 1.91% based on the IEF, the ETF that tracks that, and the TLT, which tracks the longer duration bonds, down 7.78%. Okay, that's just this week, guys. So things have changed, all right, and there's major problems all over the place. But what I can tell you is the shorter term problems are the coronavirus and the oil markets. The longer term, bigger problem is going to be in the global bond markets, okay? Here are key points to remember. The S&P 500 is likely to go to 2,000 or lower, and the S&P 500 could even fall to 1,550 or below. The coronavirus and oil market problems will go away eventually. The coronavirus and oil markets are exposing the massive problems in the global bond market. Problems in the global bond market are very serious and are not going away. To be a successful investor or trader going forward, you will need a loss-cutting and risk management system. Simple Market Signals is my system. I developed it for my own personal trading and investing, and I'm now making my information available to you for less than $20 per month. Now, let me give you a really quick overview of what Simple Market Signals can do for you. How would you have liked to had a clear signal to get out of the market back in 2000 right here at around the 1450 level on the S&P 500 and then stay out of the market for the bulk of the downturn and then have a clear signal to re-enter the market right here, which is around that 900 level on the S&P 500 in 2003. So again, you could have had a clear signal to get out there at around 1450. You'd have been out of the market for the bulk of this downturn, re-enter the market right around here at 900. That's back in 2000 through 03. Now, let's go to 2007 through 2009. Same thing. Clear signal to get out of the market back in 2007 at around the 1500 level. You would have been able to get back in the market. Clear signal given right here at around 875 on the S&P 500, and you would have missed the bulk of this downturn. Okay, now let's fast forward to 2018. I'm just giving you a quick overview of how this works, guys, and what you're missing by not being a subscriber. All right, 2018, another real bad year in the markets. You could have been invested in these green periods, okay? The way I do it and the way I designed it for myself, I'm invested on the green periods. I'm in cash during the yellows and reds. So let's just look at these two green periods. You could have been invested here, got out right here, set out this period, and then you could have got back in here and been invested during this time frame, got out here. The market was negative, almost 5%, including the dividends being reinvested back in 2018, and you could have had a profit using Simple Market Signals by only being invested about 4.5 months of the year, okay? So that's just a real quick overview of what Simple Market Signals can do for you guys. So please take a deeper dive and take a look at some of the videos that I'm going to queue up for you here in just a second. All right, so now we're obviously out of my YouTube channel, the Rodney E. Constable Success Channel, and a few of the videos that you're going to want to watch if you want to find out more about simple market signals. If you want to spend more time just on the charts like I just showed you, you can dig into these videos here. So the S&P 500 2000 through 03 using simple market signals. That'll walk you through some of those charts and drill down a little bit further on what I just showed you. 2007 through 09 time frame, same thing. S&P 500 07 through 09 using simple market signals. And then 2018 using simple market signals. So it just gives you a little bit more context around those charts I just showed you. If you want to learn even more and you want a more in-depth explanation, introducing simple market signals, which is about a half-an-hour video that digs into the system itself. So that is a really good video, about a half an hour. And then if you want the whole story, including my background, and you want a ton of great information, and you want the whole story, the Successful Investor webinar, which is about an hour long. Guys, you really need to invest some time in understanding how powerful this system is, okay? I developed it for myself. I'm sharing it with you for less than $20 a month. And I'm telling you guys, it works. So go out to the YouTube channel, check out these videos. I will also leave a link to those videos in the description box below this video. And I will also leave a link to the video of my financial services background. So if anybody's curious about my background and why you may or may not want to listen to me, this gets into my background in financial services, which is pretty extensive, including all my trading and everything. So that will also be in the description box below this video. And of course, if you haven't already done so, please subscribe to my YouTube channel. Give me a thumbs up on this video, and I will see you in the next video.